I'm Charlotte McLeod with the Investing News Network, and here with me today is Gerardo Del Real of Resource Stock Digest. Thanks so much for coming.
Thank you for having me, Charlotte.
Of course, and we're sitting here right now at the Precious Metals Summit in Beaver Creek. Everybody's very excited about gold. So let's start by getting your thoughts on the price right now. Is this a real move that we're seeing?
You know, I do believe it's a real move. Let's backtrack a little bit. 3 or 4 months ago, I was explaining to everybody that the time to get into gold was then. And it had been in this sideways pattern for years, right? And it was boring and nobody wanted to talk about it. And all of a sudden, we went from 1275 to 1550-ish, right? And now, of course, everybody's excited. Everybody's jubilant. Everybody believes that $2,000 gold is right around the corner. So me being a contrarian, I actually believe that the price of gold went a little too high, a little too fast, and I don't think that this recent pullback is over. Not only do I believe it'll go through 1450, I believe we might even breach 1400 and scare some people, specifically the newbies amongst us, right? That came into the space, that are newer to the space, that just believe it's supposed to go straight up. It wouldn't surprise me to see a retest of that 1385 support level that was so critical to breach. And so the good news is, I believe after that happens, we're going to have kind of a slingshot effect. And I think by the end of the year, we could very well be testing $1,600 gold. So that's how volatile I think the next couple of months will be in the gold space.
Okay, that's great. I was definitely going to ask your timeline or trajectory for that. So this is something we can look at by the end of the year.
Yes, you know what they say about forecasts has a way of making fools out of forecasters. So let's keep our fingers crossed and hope that when I listen to this in January, I can look back and say, "Oh, I'm glad I got that one." But I would recommend that everybody keep a little powder dry. I think there's going to be some profit taken on this pullback, and if I'm correct, there's going to be another opportunity to get into the better names and maybe cheaper prices.
Right, so you were telling people to get into gold earlier this year, and your advice now, what would that be for investors on how to play it?
My advice would be definitely define your risk tolerance and your timeline. If you invested in a company because you believe that in 2 or 3 years the share price will be much higher, then I can go out on a limb and say that the gold price will be very supportive of your thesis. If you invested or speculated in a company because you wanted to sell it to someone else at a higher price 2 months from now, then I would advise to have some caution and maybe take some profits if you have some of those right now in anticipation of this pullback.
Okay, and what kinds of companies are you looking at right now? What criteria are you looking for?
I have a multifaceted approach, so I tend to gravitate towards the higher risk, higher reward exploration plays. However, we're at the part of the cycle where the bear market was so brutal that there's companies that have development projects that have robust resources with very, very provable feasibility studies and economics that are trading at a discount that is just too hard for me to pass up. So I'll give you a couple of examples. One is Almaden Minerals. This is a company that has a market cap of approximately $75 million US. They have a mill that, brand new, is equivalent to their market cap. And on top of that, you get over 4 million ounces gold equivalent. It's a polymetallic deposit in Mexico. I say all that to say I think the company is a prime takeout target. I think it's undervalued. That's a company that, correction or not, I'll continue to hold because I think that it'll be bought out sooner or later at multiples of today's share price. A second one that I would encourage people to do due diligence on is Midas Gold, run by Stephen Quinn, who, of course, has a track record of serial success. The company has 6.6 million ounces in Idaho. Great exploration upside. Barrick owns 19.9%. Large strategic shareholders. I think it's a steal at these prices.
Okay, you mentioned takeover targets.
Yes.
This time last year, mergers and acquisitions was the big news in the gold space. What trends are you seeing right now? Are you seeing that continue, or are other things developing right now?
The trend that I'm seeing is that outside of the Australian producers, which have had the benefit of both the currency benefit and a much higher gold price in Australian dollars, a lot of companies just don't have the balance sheet to actually go out and make acquisitions. Almaden Minerals is a company, for example, that I believe would have been taken out months, if not years ago, had the companies that are the logical suitors had the balance sheets to do it. You look at the balance sheet of Pan American Silver, which I think would be a natural suitor for a company like Almaden Minerals. They simply don't have the balance sheet to go and make an offer at this point. And so what I think is going to happen, what I think is going to be a big trend the next 2 quarters, is those companies using a higher gold and silver price, if that materializes, to buffer up that balance sheet and the treasury. And then I anticipate that in 2020, you're going to see a flurry of mergers and acquisitions.
Okay, that's really interesting because, yeah, after last year, everybody thought or was saying that
Sure.
would come, and we didn't see that, so that would explain.
Yes, ma'am.
All right, that's a lot of great talking about gold, but let's move on from gold and look at uranium. So, yeah,
Uranium.
please tell me what's going on. We had the Section 232 decision or lack of decision. There's a working group now. What are your thoughts on uranium right now?
There's been whispers, and those whispers have gotten louder by the day, specifically this past week. And the whispers are that the Trump administration is going to direct his administration to purchase uranium directly from U.S. based producers. If that happens, there are very few companies in a position to take advantage of such a decision. And we'll know by mid-October or so whether or not that's going to come to pass. The bottom line is, the uranium bear market has been absolutely brutal to all of the uranium companies. So there's maybe 4 or 5 companies that can actually stand to benefit from that type of decision. You look at Energy Fuels, you look at a company like Azarga Uranium, you look at UEC. Those are obvious candidates for disproportionate gains if the decision is favorable. I actually believe the decision will be favorable. I think that, the uranium mining sector in the United States was once a big industry for us, and we're so reliant and so dependent on foreign supplies that an administration with the type of platform that they've run on, it's a natural fit for a decision that's very biased towards the U.S. producers.
What happens if we don't get that decision? Are there other catalysts that can move the uranium market?
Yes, but not immediate catalysts. So what we saw when the Section 232 decision was kicked down the road, basically,
Yeah,
right?
yeah, yeah.
They kicked the can down the road on that thing. A lot of companies lost 50% of their market cap immediately. They were oversold and they've recovered some. If this decision comes back and it's negative and there's no action, then I think you can see another 25-30% taken off, because I think then the utilities, which are the biggest consumer of supply, are going to be able to wait out a lot of the market. So we know eventually that the cost to produce uranium right now is going to be higher later on than what it is right now. We just don't know, if there isn't a government incentive for that to materialize immediately, how long that takes. That could be another year or 2 off. There's been people much smarter than I calling for a uranium bull market for 4 or 5 years now, right? And so, in a sense, it's kind of my favorite metal because it's such a contrarian play, but you have to be careful with that.
Yeah, any advice for investors who are brave enough to take that jump?
I would say initiate a speculative position, but understand that there's a very, very delicate dance that has to be done with uranium producers or companies that aren't producing but are in a position to become producers here in the United States. Next time we chat, we could be off to a raging, booming uranium bull market. Fingers crossed.
Okay, yeah, we can only hope. So those were my 2 main areas that I wanted to cover. Are there anything else in the commodity space that you're looking at right now?
Copper. My contrarian heart smiles with copper, because when you look at supply-demand fundamentals, when you look at the future as far as electric vehicles, the demand part of the equation takes care of itself. Obviously, the trade wars and the tariffs with China have put a damper on the copper space. But just this time last year, copper was all the rage, right?
Yep.
The smartest amongst us, the most well-connected amongst us, the Robert Friedlands of the world, were saying you were going to need a telescope to see the copper price because it was going to go so high. I think ultimately he'll be proven right, and I think this is a phenomenal opportunity to get into some of the better copper names.
Okay, that's all for me. Thanks so much for coming today.
Thank you for taking the time and having me.
Of course. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Gerardo Del Real with Resource Stock Digest.